Hey traders, Andrew here from Epic Markets, and in this video we're going to take a look at how professional traders use moving averages to determine trend. Now make sure that you don't miss out on all the videos that we put out on a regular basis, so smash the like button and make sure that you subscribe using the button below. Now, one of the most important things that a trader needs is to learn whether the market is moving up, down, or sideways. Now, before we get started, let's just recap exactly what an upward trend, downward trend, and sideways market actually looks like. So here on the chart, you can see that I've got an overall upward trend on this market. This is the NASDAQ on a daily chart. It starts in the bottom left-hand corner, is moving up towards the top right-hand side. That is how you can very visually see the market is going up. Flipping things around and looking at the downward trends now, we can see the Australian dollar against the US dollar has been in a continual downward trend through here up until the last 3-4 candles. And looking at a market that's going sideways right now, the US dollar against the Japanese yen, you can see this is chopping around up, down, and it's very range bound right now. So upward trend should go from bottom left to top right. Downward trend should go from top left to bottom right, and a sideways market will be very range bound, have horizontal lines almost at the top and at the bottom of that trading range. So now that we know what we're looking for, I'm going to show you 3 ways that moving averages can be used to help you determine trend. Now, if you haven't got a trading platform or a brokerage account yet, and you're looking for somewhere that you can go to practice all of this without being bombarded by ads, go to ct.epic.markets. The link is in the description below. Quite simply, go to ct.epic.markets. You can get instant access to our free web trading platform, and there's no ads on there at all. You're going to be able to go through and practice some of the things that you're learning in this video in real time on our platform. Now, the first thing we're really going to be looking at now is the order of the moving averages. And the order of the moving averages is to do with which way round they are. Now, there's a whole load of different types of moving averages that you can use. So inside our trading platform, you click on the little F at the top for indicators, and we go to trend. And you're going to see there's a selection of averages here. We have the exponential moving average, the Hull moving average, the simple moving average, time series moving average, triangular moving average, weighted moving average, and so on. So there's a bunch of different moving averages that you could choose to use. But after rigorous testing, I've found that exponential moving averages are the ones that you really want to use. So let's just go ahead now and add a couple of moving averages to the charts. We'll just add on the 20 and the 50 exponential moving average. So I've got a template here already saved with the 20 and the 50. Let's go to an upward trend to keep things nice and simple to begin with. And you can see here what I've done is I've added on a blue line and a red line. Now that blue wavy line is the 20 moving average. Hover your cursor over it, you can see that it says exponential moving average, close 20 periods, and the red line here is the 50 period moving average. Now the order of the averages is based on which way round they are. So this is pretty straightforward. All of this in this video is, to be fair, but if the blue, the 20, so if the smaller number, the faster moving average is above the higher number average, so 20 is above 50, the smaller number is above the bigger number, you have an upward trend. Starting at the bottom left of this chart, the beginning of the upward trend, you can see that we have the 20 above the 50, and it stays that way throughout the chart up to the current date. That is all an upward trend if all we do is look at is the order. Now, flip things upside down and look at a downward trend. We have the 20 going down underneath through the 50. This is the beginning of your downward trend. And technically, because the 20 is still underneath the 50, we're in downward trend right now. And if we go and look at the sideways market again, let's just zoom in slightly. You'll notice here in the sideways markets, when it comes to looking at the order of the averages, they'll be crisscrossing backwards and forwards fairly frequently, and it becomes hard to know which direction the market's actually moving. So the order alone is not enough. Because if we just work off of the order, it gives us a very black and white picture. It's either 20 above 50 or 20 below 50. The next thing that we need to do is really throw in a couple of extra things that can really help us. Now we're going to start talking about the angle of the moving averages. Now, the second way that you can use moving averages to determine the trend is to look at the angle, which way they're pointing. Now, let's just really simplify this. All I'm going to do is get rid of the 20 moving average and just show the 50 moving average on the chart. I'm just going to right click, hide it away, and just leave the 50 moving average there so that you can see it. Now, again, let's just go down to an upward trend first of all. And you'll see straight away that this red moving average here is pointing up. And what I mean by that is the line itself is diagonally pointing to the top right of the chart. Okay, that means that we have ourselves an upward trend. Now, personally, I'm a big fan of simplifying your trading as much as possible. So you don't want to have 17 different moving averages on your charts. 1 or 2 is plenty. But you can see here how the angle of this 50 moving average really helps us to determine the trend. Flip things upside down and look at a downward trend for a minute now. And you'll notice that we have the 50 moving average pointing to the downside. This is a downward trend. However, if you look at the far right hand side of the chart, which in real time is all that really matters, you can see right now that this red line is no longer pointing down. Now it's pointing sideways, and at this point it looks a lot like we're going to go into a sideways market. And to really show you what a sideways market looks like, I'll jump back into a sideways chart so that you can see. And that red line there, very flat, hardly any directional movement. That's just a great way of showing you a choppy sideways market with a 50 moving average there. And you can see how in an upward trend, price might bounce off that 50 moving average. In a sideways market, it just crisscrosses straight through it and completely ignores it. Now, the third thing to really look at is the separation of the moving averages. And this is where we really put two things together. So we've looked at the order, we've looked at the angle of the averages, and now we're going to look at the separation between the averages to determine whether or not the trend is getting stronger or whether the trend is getting weaker. So I'll jump back onto the chart again now. Let's add a couple of moving averages on. I'll put that 20 moving average back in place and we can see what's happening. So now we've got the 20 and the 50 moving average back on the chart. And you can see through here what we've got from the bottom left-hand side. Let's just give ourselves some more room to work with. From the very bottom down here, we've got the blue and the red line, blue being the 20 and then the red being the 50. We've got these lines separating apart. Now, as they continue to separate, that means the trend is increasing in strength. And you can see as we get this quite extraordinary move here, these moving averages are continuing to separate. Now we then have more of a parallel effect where the 20 is kind of maintaining its distance from the 50 during this section here. And what you have there is a trend that is maintaining its momentum, but it's not exploding away to the upside. Okay, and then towards the end here, we have a slight dip, and then again, the separation starts out initially parallel, and you can see the 20 starting to point back up again, meaning that we're getting stronger and stronger. Now, flip things upside down, and let's go and look at a downward trending chart, and you'll see a similar thing. We'll see the 20 is underneath the 50, we have this downward trend, and as long as they're separating, the market's continuing to trend and actually increase in trend strength. So that means on the way down here, the trend is actually getting stronger throughout this patch here. Then we hit a parallel section, which is very normal. And basically, we're just allowing for the price to catch back up with the average again before it moves again. But towards the far right-hand side of the chart here now, this is really worthwhile looking at because you can see that we're no longer separating. Now we're actually squeezing together. And when you get this squeezing together of averages, it's usually a pretty good sign that we're about to either go sideways or change trend. So right now for me, looking at this Australian dollar, this was a downward trend. It no longer is, because that 20 moving average is actually pointing up. So if we're looking at the angle, that's pointing the wrong way. The 50 is pretty flat. They're squeezing together, which isn't actually giving us any kind of trend continuation there. Now, Take a look at a sideways market, and you can see these are squeezing together, giving us less of a reason to want to trade. So they're squeezing together, pointing down, flattening out. That's basically, this section here is where I think we are right now on the Australian dollar. We're no longer separating, we're starting to squeeze together, and we're actually running out of momentum, and we're very likely to continue going sideways, which is exactly what this dollar yen has done. So now that you've seen how professional traders use the order, the angle, and the separation of the moving averages to determine the trend, let me know in the comments which is your favorite. Are you going to start using all three as part of your trading from now on? Do you already use the order? Do you already use the angle? Do you already look at the separation between the moving averages? Drop a comment below, let me know which is your favorite. And again, if you need to open a trading account, check out the link in the description below, ct.epic.markets. And if you really want to learn to trade and get access to professional trading systems that are mechanically profitable, check out another link in the description as well about becoming an epic trader. Of course, don't forget to smash the like button and subscribe for more videos just like this, and I'll see you in the next one.